So let's get started. So I'll try to moderate that panel, but obviously we see these topics are very well known. At least the news are very well known. So I think I'll be able to do it. So the name of this panel is actually the SEC Anti-Crypto Army. We have with us three amazing panelists to discuss that. We have first Meltem, Demirors from CoinShares. We have Harry Austin from Galaxy Digital, and we have Cody, Carbone from the Chamber of Digital Commerce. Welcome, guys. Thank you very much for being here. Let's get straight into it. There's lots of things happening especially this year when it comes to the SEC. Obviously, all of you saw the news with Coinbase and Binance, and there's this kind of strong sort of feeling and sentiment that there is a sort of anti-crypto sort of contingent that is going after the space, and maybe it is justified, maybe it's not justified. This is basically what we're going to talk about today. So I guess my first question would be for you, Meltem. Where do you feel the criticism by the SEC is justified, and where is it obviously unjustified? But let's start with justified.
Okay, so I've been in this industry for 8 years, which is a very long time. In most industries, not a long time. 8 years in crypto is forever, and I feel that way. I feel very tired sometimes. Look, in the US, we have a really interesting issue because you have an alphabet soup of regulators. You have a Congress that can't get its shit together, excuse my language, but I'm sure you can talk about what that's like. And at the end of the day, we have an industry, let's be very realistic, that is rife with vaporware, fraud, and just absolutely egregious, ridiculous behavior. And by the way, this is not abnormal, right? I think tech broadly just tends to attract two types of people. You have these crazy visionaries that, sometimes have sociopathic tendencies, which can be great. People have built really incredible businesses because they're absolutely maniacal and insane. But the flip side of that is people are maniacal and insane, and they engage in egregious behavior. And I think one of the really unfortunate realities of the current state of crypto is there are a lot of investors. I always like to joke we have more VCs than there are actual companies in the crypto space. And again, I think the last 5 years really in tech more broadly, we've seen just this incredible rush to raise and deploy capital, and it's all about the incentives. So the incentive is to raise and deploy capital. That leads to investors not doing diligence. It leads to founders getting away with insane behavior. The things I have seen in the last 4 years of my life blow my mind. And I come from the oil and gas industry. I've seen really messed up, blow my mind. And
you mean in terms of founder behaviors?
Founder behavior, people expensing private jets, people purchasing homes and expensing them, just insane things. And it's not exclusive to crypto. But at the end of the day, what we're dealing with in crypto is we're dealing with people issuing financial assets. We're dealing with people distributing financial assets directly to the general public. And I think that's where crypto just becomes an incredibly easy target. Because when I started in this industry, there was just Bitcoin. And the dream was pretty simple. We were going to make money for the internet, and it was going to be amazing. And it still is the vision, but I think it's very hard sometimes to look at the industry and to be sympathetic, because you have to put yourself in the shoes of a regulator or congressperson who has an electorate. You have to look at the stories that are getting published. At the end of the day, some of the things that we've seen, they're difficult to defend because they're insane and egregious and maniacal. Now, the flip side of that is, does that mean we shouldn't have clear rules and regulations? No, absolutely not. But again, I think one of the challenges is, at the end of the day, we are dealing with financial assets and we are distributing directly to the retail public. But I just think the last 5 years have been a really unique time. It all starts with incentive, not exclusive to crypto, but because we deal in an industry that's so easy to access, anyone with an internet connection can interact with crypto. So I think it makes it a very easy target, more so than other industries, right? WeWork only defrauded institutional investors. Crypto, you can touch anyone with an internet connection. So I think, again, it just raises the stakes quite a bit. That's one side of it. That's the negative. There's a lot of positive, but we can
That's
get
the
to
justified side. Harry, what's the justified side according to you?
Yeah,
Justified.
The justified. Okay, so
do we deserve it?
I think there's some aspects of the industry that the regulators or the policymakers are justified in criticizing, especially, I would say, in the decentralized marketplace. You know, we all know the FTXs and the Celsiuses and the Voyagers on the CeFi side, but on the decentralized marketplace, which I think a lot of us here in this room see the promise of crypto blockchain because of the decentralized marketplaces that are going to be built. However, there have been countless rugs, scams, vulnerable smart contracts, and it's people like in exploits that have happened in the marketplace. And it's people like people here in the room that are really going to bring the industry into the forefront and bring it into mainstream. If you're going to build a new decentralized marketplace, you need the foundation, which are smart contracts, need to be built in line with regulatory compliance, but maybe even just at the foundational level, how they're being built. You know, if you think about, a lot of people here are familiar with COSO framework for your controls that you build out your financial statements with, or from a fraud perspective, or the NIST framework for cybersecurity. We don't have that yet for smart contracts. And I envision a world where a lot of the people in this room are going to help drive that innovation and that standard that not only can be the foundation blocks of what we build, but also for the auditors, right? We have Halborn and Trail of Bits who are responsible for auditing all these smart contracts, but there is not a standard bearer audit process that they go through that everyone is a user of these smart contracts and everyone's a user of these marketplaces has to rely on. So I think the criticism is fair today around how consumers can trust what is being built without those standard bearing procedures that everyone follows. So I look forward to a lot of you in the room on helping drive the innovation that brings those standards into place.
Cool. Cody, what's your vision on the justified side of things?
Where specifically the SEC could be justified in all of this? Well, I think a lot of it's been said. I mean, I think that there are still, for as frustrated as the community can be with the SEC and with regulators in general, I mean, there are still a lot of scams out there. We've talked about the rug pulls. We've talked about the pig butcherings today. And so for all the enforcement actions that we see out there, and the ones that the industry may file amicus briefs about, and the ones that we get, concerned about and we're up in arms, there's a ton of enforcement actions out there that we don't see every day, that the SEC is likely justified in bringing because they're out there to protect investors. Now, I think where the confusion is and the consternation from the industry may be justified, and this is probably transitioning into the next question, is that we want rules, regulations, standards now. As you said, you've been in this industry for 8 years. That's a lifetime compared to most people who have been in this industry, and that's a lifetime compared to some of these regulators have, one, been in their posts, but have, two, made themselves aware of this new industry. And the regulator's job is, yes, to protect consumers and to protect investors, but they're also out there to protect the incumbent financial system, the incumbent regulatory system that they have. The SEC, the securities laws have been on the books for, almost 100 years, since the 1930s. And what they view crypto as is something that's new and nascent and novel and a threat to what they have built and to what they have protected. And so I think, yes, while we're concerned and there's a lot of bad out there and we want standards and we want tailored regulation, we want Congress to act immediately, it takes time. The regulators are trying to get up to speed on just what we're talking about. The amount of times that I've gone into a regulator's office or a legislator's office and I start talking about blockchain technology and they go, let me stop you there. Can we start with what is blockchain? It happens every day. And it happens probably a lot more than we would hope right now as an industry because we're all in it. We live in this bubble where we're dealing with this every single day. We're focused on making the system better, on building. This is just one small part of their portfolio for a congressional staffer or for a staffer at the SEC. And so they're trying to learn and get up to speed. And so I think we need a little bit of patience. And so that's maybe where the SEC can be, and regulators can be, it's justified a little bit that they're trying to learn. And they're learning unfortunately, through enforcement actions because they don't have regulation right now.
Harry, what's the unjustified aspect?
I would say the biggest thing to me is definitely, it seems like a lot of the politicians like to reference the crypto and the blockchain rails are the sole source of money laundering in the world. But if you really look at the data, I think the UN puts out a report every single year that talks about global money laundering and illicit activity. They quote $800 billion to $1.2 trillion a year is considered money laundering. That's done still on fiat rails. And in the crypto space, it's in the tens of billions. And so I think that narrative that the regulators and the politicians like to strike is a little misguided. And frankly, the beauty of the blockchain is that it's transparent, and at least in today's form. Obviously, we have private and public blockchains, but on the public blockchains, you have extremely powerful tools that can assist the regulators and the authorities, like TRM, chain analysis. I think you guys are familiar with those, where bad actors can get sought out in a much faster way. And you'll see this actively as exploits are happening, where the actors are getting identified quick, they're returning assets, and I don't necessarily know if that would happen in a less transparent space. So I think that narrative that is driving the anti-crypto army around AML, KYC, which, by the way, is really important for us to get mainstream adoption, is misguided on how much money laundering is actually happening through crypto and blockchain rails.
Cool. Meltem, do you agree with this terminology, like anti-crypto army? Like some people told us, hey, you should not put anti-crypto army as a name for your panel. It's a little bit too aggressive. Do you agree with that?
Let's get aggressive.
Okay, cool.
I love to be aggressive. I say that half jokingly. No, look, I think, so you mentioned a few things our politicians do. Look, I'm going to be very real. The most important job of a congressperson or a senator is to get reelected. That's it. Our electorate is old, so old, right? These people who are running our government are extremely, extremely old. They've been in positions of power for a long time. It's about getting elected. How do people get elected? Sensationalism. Like being in DC, no offense, it feels like being at the circus. If you go to a congressional hearing, if you testify in a congressional hearing, it's like being at the circus. It's not about policy. It's not about doing these things. It's about getting your soundbite. It's about being in the paper. It's about having a position. And I think a lot of politicians have found that saying extreme things about crypto results in them getting a lot of media attention, which is constructive for polling, campaigns, campaign donations. Again, the incentive here is to get reelected. We're in an election cycle now, so I think it's only going to ramp up, unfortunately. And the flip side of that is true as well, right? We see other parts and other sort of politicians embracing crypto, and they're really pro-crypto, and they're very excited about Bitcoin. So I think the anti-crypto stance, it's not necessarily directed at crypto specifically, but I think the incentives in DC are very much around, you have to make a statement, you have to have a platform that you campaign on, and there are certain politicians who are going to campaign on this platform that crypto is evil and it's only used by money launderers and it's terrible for the US economy. And then there are other politicians who are going to campaign on a platform that's pro-crypto and they're courting the industry. A lot of politicians coming to town this week for mainnet, raising money. So I think you have to pay at least $1,000 to get into these events. So I think actually the smart approach, if you're trying to get elected, is court the crypto industry. We have a lot of money. People want to spend it. So I think we're going to very quickly start to see, people realize that maybe being pro-crypto is beneficial. But again, I think it's not really everyone is anti-crypto. The SEC is anti-crypto. Let's not forget Gary Gensler was incredibly ineffective when he was at the CFTC. He's a political person. That's why he's in DC. That's why he's SEC chair. So he's trying to create his own platform, his own legacy, and being tough on crypto gets Gary Gensler press. So again, I'm not saying it's necessarily anti-crypto, but to me the incentive, you can talk about the incentives. I mean, well,
you hit the nail on the head, and that's why I wanted to jump in, because I have an anecdote that I think is directly on point. When Elizabeth Warren, senator from Massachusetts, who I'm sure we're all familiar with, came out with her big Twitter post saying anti-crypto army, and that was really the first place I had seen, and I think many of us saw it. I went into her office and I talked to her staff, and I said, listen, is this really your number one priority? Are you real? Is anti-crypto your number? They laughed. They're like, of course not. There are so many other things that the senator wants to be doing. So I said, well, why this? Like, why do you go out? Why is this the first thing in your reelection campaign and your, on your social profiles? It's the engagement. It is the Twitter engagement. There is nothing that drives more engagement to the senator's tweets than when she tweets about cryptocurrency.
The ratio is amazing, by the way.
It's fantastic.
Incredible.
And it's phenomenal to see, but that's where we're at. And so, again, this has nothing to do with substantive policy for a lot of the anti-crypto army. It's become a binary decision of what's going to drive votes for me if I'm supportive or I'm against. They don't look into the technology. They don't care to learn about the technology. Now, there's a huge community, as you said, on Capitol Hill, in the administration that wants to learn about the technology. But when you look at a politician, again, their only incentive is to get reelected.
Got to give them more cash.
It's done by votes and money. That's all they care about. And right now, you've got one of the most popular senators who ran for the White House, who is the anti-crypto army. She has a massive voice for the entire Democratic caucus of Capitol Hill. They look at her for leadership. They see what she's doing, and it's successful, and she's raising money. There is not a great counter to the pro-crypto community. There is not a lot. Money's coming in, but there's not that voice that is equal to the stature of Elizabeth Warren saying, no, we need to be pro-crypto. We're starting to see more people in the House Financial Services Committee, Senate Banking Committee talk about crypto favorably and try to move substantive legislation, but they don't see the votes right now. So there's a lot of people sitting on the sideline, and they'll sit on the sideline until they see the votes, or they'll see the tax revenue come to their district and jobs come to their district related to blockchain technology. And until that happens, they likely won't wade into the political debate.
But you don't think that, for instance, in the case of Elizabeth Warren, they are like beyond just like sort of the marketing and sort of the political positioning aspect, there are some very like fundamental like sort of misconception on the technology itself? Do you think that there are such, or it's mostly like marketing?
I think there's a ton of misconceptions still about the technology. I would say right now, and this is probably putting it conservatively, that Capitol Hill probably 15-20% of staffers and members of Congress actually understand blockchain technology. And I don't mean at a deep level. I mean at a very high level. They understand some of the benefits. They've heard of Bitcoin. They've heard of more than just the media headlines around FTX and some of the other market failures. Those people tend to sit on the committees of jurisdiction. So House Financial Services, House Ag, Senate Banking, Senate Ag, and are dealing with these issues because there's people in those committees trying to move legislation, market structure legislation, stablecoin legislation that would kind of create these jurisdictional lines at the regulatory level. Those are the people that most of the crypto industry, and I'm sure people in this room and your companies, have gone to and advocated and have educated on what we're talking about. People outside of those committees, and I think the industry needs to do a better job at this, and this is myself included, people outside of those committees, which again, maybe 75, maybe 80% of Congress, have no idea what we're talking about.
But I want to counter that. I don't know how most things I consume work, right? And I think one of the approaches we really mess up is trying to educate about the technology. And the biggest issue, I think, in getting the Hill to care and getting the SEC to move is crypto is what, a $1.2 trillion asset class today. Let's say of that 10 to 20% is here in the US. So let's say it's 250 billion to be generous, right? The US equities market is what? 60, 70 trillion, huge market. US credit market is massive. The mortgage market is massive. Student loans are an over $1 trillion asset class. So like compared to other asset classes, it's a blip, number one. And number two, I could explain technology to someone until I'm blue in the face. It doesn't really register because at the end of the day, the question is, what's it used for? How do I explain it to my constituents? So I think the hard part is we're in here trying to explain like this is a ledger and this is a Bitcoin and this is... It doesn't make it. We need use cases, and they have to be sizable and products and experiences that people can actually like use. We don't have that aside from trading and exchanges today, so it's challenging.
Yeah, and I want to second that. I think the industry as a whole needs to do a better job of developing real-world use cases so that people can actually. Everyone in this room needs to be able to use crypto on a daily basis or on a weekly basis, right? Whether it's you go get on the subway and you use USDC or another stable coin to pay for your subway ticket. There has to be real world use cases in my eyes for this industry to actually take off because the vast majority of people just hear the buzzwords, crypto, blockchain, and they're not understanding what the real what the real benefit is. I mean, we could go on and on around what benefits there could be. I mean, to me, that's margin expansion for middle and back office. There's a reduction of headcount needed for these companies because blockchain gives you one source of truth. And I think everyone here, when they go out into, whether they're auditing or they're consulting, they'll see that companies in general are inefficient internally. Data structures are inefficient, and hopefully blockchain will fix that. But today, I don't think that there has been a significant amount of development done outside of, frankly, trading that people can see with their own two eyes.
Trading is very profitable.
Yes.
But so you don't think that you don't think that they are like very important like misconception? It's just that when there will be use cases, basically when be like use cases that will take off, like all these misconceptions that they have in their mind will kind of disappear.
Well, I mean, I still think there's misconceptions, right? One on the industry is that we don't want regulation. I think maybe you're starting to see since FTX that the industry leaders are begging for regulation, right? I mean, if you really think about it, how the big carrot for the industry is access to traditional finance capital that is sitting on the sidelines. And without regulation, we don't get access to that. And so it's counterintuitive for people to think that at least the most responsible and largest players in the space don't want regulation, because you're not going to get a risk committee at BlackRock or any of the big at Citadel or anybody else to say, yes, let's go invest in all of this, then I'm going to get the regulatory heat that comes with it. In general, I do think there is a misconception that we don't want regulation, at least the responsible, larger funded players in the space.
Makes sense. So, Cody, you mentioned it a little bit, but so next question is like, how do we fight the army, anti-crypto army? Meltem?
Very aggressive.
Yeah.
One, vote. I mean, that's huge. Vote. If you want to see a change from your politicians, get out there and be active. But use cases. It really is all about use cases. I mean, the amount of times I've talked to someone at the SEC or the CFTC or even some of the prudential regulators, and they're like, man, we just had a developer come in here and I didn't understand any of it. And so no offense to the developers and the technologists in the room, but probably stay at home. Don't go to Washington, employ your policy people, or convince them, or tell them and educate them on what you're trying to build and what problem you're trying to solve. If you go into any policymaker in DC or really at the states or internationally, and you start with, here is the problem I am trying to solve, and you make it relatable to something that they already understand in their everyday life, that is how you change hearts and minds in this stuff. And so we have to be more tailored in our messaging. We have to focus on use cases, because when we talk about the technology, we're dealing with a lot of people who are 70 and 80 years old who just will never get it and have no interest in getting it. Another quick anecdote, the first senator I ever talked to, I'm not going to say his name, but he's very, very old, and we can talk after about him. I went in there and I talked about blockchain technology, and I talked about the promise of Bitcoin, and I used big buzzwords, which I would now caution against, but talked about borderless and financial inclusion and accessibility. And I get through my opening pitch, and he said, let me stop you right there, pull out a Bitcoin. And so I pull out my phone, and I'm like, okay, like here's how you can buy, and here's how you can go to an exchange and buy and trade. He goes like, show me an actual Bitcoin. Because here's a $5 bill, and I can show you this, and you can't show me a Bitcoin. And so that's what we're dealing with at a large scale level in Washington. So just keep that in mind, because it's really hard, but we have to make this stuff make sense, and that's how we're going to change the narrative and fight the anti-crypto army.
Harry, how do we fight?
I think education, but it's probably part of your daily job. But the other thing I would say is partnerships with the likes of the big traditional finance players and the big accounting firms. I mean, it's so interesting. There's been applications out there for Bitcoin ETFs for years now at this point. But as soon as BlackRock got involved, the excitement and the thought around the possibility accelerated. I think the power brokers on Wall Street have access that the crypto natives don't when it comes to regulators, and giving comfort to the regulators that this space can be adopted. So I think the industry in general needs to encourage traditional finance to get involved in the space, because that will just accelerate the adoption, not only from bringing money to the space, but also making the regulators more comfortable.
Meltem, something to add on how we fight?
Quantify and qualify. the words we're using make no sense whatsoever. Democratize. What are we democratizing? What does that mean? Decentralized. None of this shit is decentralized, excuse my language. But we are just throwing around these empty, ridiculous words. We need to quantify and qualify, which goes back to the use cases like, how many people are using this? How does it compare to using the traditional payment? How much money are we saving? How are we actually doing these things? I think that's the really hard part for me, because there are a lot of brilliant people who have brilliant ideas. They may have built a brilliant piece of technology, but unless you can market it and effectively sell it, you don't have a product. So we're building a bunch of really expensive chairs that nobody will ever sit in. And they're very expensive, and they're very beautiful, and they're very technically elegant, but they serve no function. So we cannot quantify or qualify how tangibly this technology, these assets, this infrastructure we're building is actually impacting real people who vote and donate and show up and sort of move culture and this country, the economy forward. And so I think the really hard part that we really struggle with as an industry is to quantify and qualify, but we have to always quantify and qualify. So if I could say one thing as an industry is like, quantify and qualify. It's the show me thing. It's like, okay, you're democratizing. What are you democratizing? Show me. Who for? And I don't think we have good answers. We're starting to get better, but I don't know. You hear me all the time. So say these things to Antoine, so it gets quite old. The meaningless buzzwords have to stop.
It's kind of stop talking about the entire crypto army and just build product that people will use, and then this is what will make us win, basically.
That's the whole point.
I'm not too sure if it's a good conclusion, but that's kind of the conclusion of that panel, I guess. Do you guys have any questions?
Cool, okay. Okay. And the House Financial Services Committee named a subcommittee chair back in August. Where do you see that going in getting any tax law changes passed, or any rules with respect to the CFTC or SEC being passed, so we can better understand the rules for all three we're working with?
I'll start. So with the Senate Finance Committee response, I'm glad you brought that up, because I think it was a really valiant effort from Senator Wyden, the chairman, and Senator Crapo, the ranking member, to really understand what some of the tax issues are as it relates to digital assets. I think they did it a little late. I wish they had done it right after the infrastructure bill passed, before we moved forward with the IRS proposed broker reporting regs. But I think it still shows that they're trying to be proactive and they're trying to educate themselves. I would encourage anyone who submitted a response to the Senate Finance Committee to follow up and to offer a meeting and to educate on your response, because I know that they received over 100 responses, and there's 2 staffers trying to sift through all of those responses that, on average, I know our response was 18 pages. I know they're very long and they're dense, and a lot of it will go over their head. I would encourage you to follow up, go into DC and have a meeting with them and explain the specific issues and explain your specific answers to their questions. So I think they're being proactive, and that's great. The only downside of that is that the House Ways and Means Committee, which focuses on tax in the House, is not interested in moving anything on crypto until the jurisdictional lines of what is a digital asset security versus what is a digital asset commodity is resolved. They have said, we are going to sit on the sidelines until the SEC, the CFTC, and those other committees figure out what the hell they're doing and who has jurisdiction here. And until that's resolved, we're going to sit on the sidelines. So you've got one chamber being proactive, trying to learn and educate themselves, as the IRS is moving on their own complete path. And then you have another chamber saying, we're going to sit back. So we've really got to be more proactive. So I think it's great for anyone who responded to that consultation. I think it's great that they put forward that consultation. But if we really want to see changes in tax come from the legislative branch, I think we're probably holding our breath for a bit, and it's probably not going to happen. IRS is going to move ahead, and I'd also encourage anyone to submit responses to the IRS proposed broker reporting regs if they want changes on the tax laws. Be active. Respond.
Hi, my name is Jed. This question's from Meltem. As an investor, how do you think about deploying capital in this environment? We got obviously the high interest rate backdrop, which is terrible for the emerging tech industry. But on top of that, we got the regulatory risk. Do you see, the innovation and industry sort of moving away from U.S.? In other words, do you see better investment opportunities abroad?
Yeah, so we invest globally, and I think it's the same thing it's always been, right? Like in physics, we have thermodynamics. In business, you have balance sheet, income statement, cash flow. Like, just to be very boring, I come from a corporate finance background, so to me, like, those are the fundamental truths of a company, a protocol, project. You can call it what a DAO, whatever it is. There has to be cash flow. There has to be a way to sustain and support the operations of the business. And again, investors, right, we're in the business of deploying risk capital to make that capital appreciate, right, materially more than the benchmark risk-free rate or whatever your benchmark is. So the challenge right now is we've had 10 years in the broader tech industry and really 5 years in crypto of investing that is completely detached from any sort of fundamentals that you can quantify, right? We see companies raising at like 100, 200, 300x ARR multiples, right? And your public comps are trading at like 5 to 8x. That doesn't work, right? Like you can perform financial alchemy, but not persistently. And so I think the challenge right now is, as I talk to other investors and people who are deploying capital and internally, number one, people are really focused on their current portfolio, right? Because investors got to deliver. At some point, those paper marks that you raised your funds on, you got to put that cash back in your LP's bank accounts. So the big focus right now is bolstering existing investments, and a lot of funds are doing internal rounds to hold portfolio value steady or potentially even mark up portfolio value. So that's game number one. Game number two is right now there's a lot of scrutiny on metrics that arguably should have always been there, but look, we're all guilty of, getting caught up in this mindset, but there is a lot more focus on metrics, and there are still certain themes, like AI is really hot, so I think there you can get away with these lofty valuations, but I think in other areas there's much more scrutiny on cash flow in particular, and how to get to break even and eventually profitability. And the last question is really going to be, I think, also a regulatory question, is the IPO window. The IPO window has been firmly shut. We haven't seen a lot of direct listings. We haven't seen any SPACs. That window is shut. So there are just not a lot of pathways to liquidity in the US at the moment. We're not seeing a lot of secondaries. Secondaries are being done at 80, 90% discount, sometimes more, especially if investors are strapped for cash. And we're not seeing a lot of M&A. So it's going to be a painful 3 or 4 years. It's hard to raise. It's hard to continue to raise. It's hard to get customers because your customers are also struggling. And in crypto especially, the circularity of capital is a huge problem because you have startups selling to other startups, selling to other startups. So when there's not more money coming in the top of the funnel, right, it's difficult to sort of sustain that momentum. So I think for all of these reasons, it's going to be challenging. But I do think there are a lot of great companies who have built really great products that people use every day and are very willing to pay for because they create tangible value. And so it's going to be painful, I think, but I think over the next few years we'll start to see companies that don't have pathway to profitability, break even, building a significant business without this constant speculative sort of aspect. They'll get sold for parts, or they'll get acqui-hired, or they'll be wound down. And then there are a lot of companies that I think will do really well, namely by providing software as a service. I think that's a very big growth category. Managed infrastructure, hosting infrastructure is a big one. But these really providing services that people are willing to pay for and pay for persistently. So it might sound pessimistic, but everything is cyclical, I believe, right? And you live through these cycles. I'm almost 40 now, so I've 2 cycles under my belt. I'm sure we'll have a few more, hopefully. But I think everything's cyclical, so I think we're going to go through this cycle, and then we'll come out the other end, and we'll see another cycle of speculation, and the world continues spinning.
You were speaking about, there's 15, 20% of Congress that understands this. And you see recently there's been some laws proposed by some of those members to regulate the industry, but it seems like Congress can't pass a law about any controversial matter. Congress is focused on keeping the government open, right? Funding the military must pass legislation. So some people, I've talked to some other policy people who say, well, that is the avenue to regulate the industry, is you develop the language in a law that will never pass, and then on a must-pass law, some of that language can be inserted, and that is how eventually regulation of the industry will take place because there's just simply no other way coming out of Congress. Is that something that you see as a potential option, or do you agree with that point of view?
Yeah, absolutely. It's usually those must-pass bills, the National Defense Authorization Act, or a farm bill, or an FAA reauthorization, where people will they're called Christmas tree bills, where people will try to add on their own personal priorities because they know they must pass. I think the issue right now in Congress, and it's a really good first exercise, but a lot of these legislative proposals that are put out there are trying to solve all of the world's problems in one fell swoop, which means that they're trying to regulate the entire industry. Lummis Gillibrand is a good example. The Fit for the 21st Century Act, even the payment stablecoin bill, even though it's just trying to regulate, stablecoin, it's a 75-page bill. What seems to be very effective for actually moving legislation, given the partisan environment we're in today, is having very narrow 1 to 2 page bills that solve one small component or create one regulatory line that we're looking for, versus trying to regulate everything. Adding those to those must-pass bills is the most effective way to move legislation right now. A good example is that there's a Stablecoin Transparency Act out there. It is 1 page. I encourage everyone to read it. And it would say that stablecoin issuers need to be fully collateralized and they need to have monthly audits, something like that. I'm paraphrasing. It's a 1 page direct bill, and they're trying to add it to an NDAA or to a farm bill, and that's something that could pass. So unfortunately, because of the partisan environment we're in and it's hard to move everything, the legislative calendar is extremely unforgiving. You mentioned the government's probably going to shut down in 2 weeks. House Ag, Senate Ag focus on the Farm Bill, there's reauthorizations, and then they still have to fund the government. So there are avenues to put on a bill or 2 bills, but these 100-page bills that we're usually debating right now are likely not going anywhere right now.
Any last question? Yeah, there's one last question.
Wait, I have a question. Do we think anything's going to get done with election season? Because that seems to be the other big...
Yeah, that's the other thing. I mean, election season has already started in D.C. We had the first presidential debate in August, and come January, members of Congress, especially the House, are not really in Washington at all. They're all in their home districts. So I think best case scenario, we have the market structure bill, I think, is going to pass out of the House of Representatives. That's because the leadership and the sponsors of that bill are Patrick McHenry, chairman of House Financial Services, G.T. Thompson, chairman of House Ag, and then you've got Tom Emmer, the majority whip, who decides what goes on the House floor with the rest of leadership supporting that bill. So I think we could get a vote, find one sleepy week if the government is still operating, unfortunately I have to say that, one sleepy week this fall where we can pass that bill. But then it's dead in the Senate. The Senate has no desire to move anything unless it's illicit finance related. They do not care about the SEC CFTC debate. They like what Gary Gensler's doing, the Democrats in the Senate, because he's one of their own and they support him. So unfortunately, I would say if I was a betting man, it's almost 0% chance we get anything done this Congress.
I have a very simple question. I don't mean to be rude or disrespectful either in my comment, but it's a saying in science that scientific theorems don't die, but the people that believe in them do. And that's sort of how it advances, right? Because it's hard to change a person's mind. Do you think our problem here might be solved in 10 years, just on its own? I don't mean to be disrespectful, but generations come and generations go. There will be less gray hair in Congress in 10 years. The average age of a baby boomer is up there. It's sad to say because my parents are boomers. I love them dearly, but might our problem solve itself?
So I think if you're, yeah, maybe. I don't.
Or it could get worse.
I think if you're looking for a reason to be optimistic, the market structure bill that I'm talking about, it passed out of House Financial Services. It had every Republican support it. It had 6 Democrats support it. The average age of those 6 Democrats was 45 years old. The average age of the House of Representatives is well above 60. And so I think if we're starting to see younger and younger members get elected, and they may not be pro-crypto. They may not be, the crypto champion that Senator Lummis is or Tom Emmer is, but they understand the technology and they understand the benefits and they understand the use cases. And something that has been very compelling talking to those 6 Democrats is what they're saying is my constituents are using this stuff. So whether you like it or not, they're using this stuff. And if we want their activity to happen here, regulated by the US regulatory system, which we think is the strongest in the world, then we need to do something. And it's not just this mindset for a lot of the older members of Congress who say, I don't get this and it shouldn't be here and let's just remove it from the US. It's not that mindset. It's, I don't care if you like it or not, my constituents are using it, my kids are using it, my kids' friends are talking about it, let's regulate it, let's figure it out. It doesn't matter if you like it or not, it's here to stay, let's do something. So maybe, but I think if you're looking for a reason to be optimistic, it's like look to those younger members who seem to be more inclined to do something here.
Cool. Thank you very much, guys. It was a
Thank you.
great conversation.